Hi everyone, let's go over my medium time frame, low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with my medium time frame bullish scenario where we are looking at a finished wave 1A, 2B and now continuation to the upside in a wave C or a wave 3. The most common target area for a wave C is between the 1 and the 1.236, which is between 35.1k and 36.7k, and usually a minimum target for a wave 3 is at the 1.618 trend-based fib extension, which is at 39.3k, where we know based on my macro and high time frame video that we have a very important resistance around this area. The main difference between the two is that the wave 3 carries much more volume to the upside and also has a more parabolic structure with bigger candles. You definitely want to see more volume than in the first move to the upside over here. While for a wave C, you expect a bit more of a lazy structure to the upside, volume being quite similar to wave A and also usually takes longer in time than wave A. Now you can also see that then wave 2 or wave B ended on top of the 0.382 Fibonacci taken from the low to the high of 1 or A, which is a rare target for a wave 2 but a common target for a wave B. So that increases the probabilities for, if we get a move to the upside, this being a wave C instead of a wave 3. But then again, it also depends on how price is going to move to the upside if it does, because of course we also have a more bearish scenario where we are still looking for a move to the downside. In this particular scenario, we are looking for a zigzag 5-3-5 wave structure, currently working on finishing wave B in an A3 wave structure over here. In this scenario, the most common target area for a wave B Fibonacci wise is between the 382 and the 886 taken from the high to the low of wave A. And I think that still one of the most interesting areas for the high of a wave B is around this triple top at 30.4k. You have high 1, high 2, high 3 for maybe then a liquidity grab and a move to the downside. If we look at the resistance areas, then price currently finds resistance at the target box that we had. Yesterday it was blue, today it is white because it has been touched. It spots between 30k and 30.1k. At the triple top area, we have resistance till 30.6k, and then above, the highest one I have is between 31.1k and 31.3k. Now, if we zoom in to this structure over here, in the bearish scenario, we expect then a 3-wave structure, right? Because in the bullish scenario, we want to see continuation. So basically what I'm saying is you want to at least see price go to this highest resistance area for then the probabilities going up of price continuing to the upside. But in the bearish scenario, we also can still expect a move to the upside. So in the bearish scenario, right, we're looking for an A, B, and then a C to the downside, where currently the probabilities of this being an ABC compared to a WXY are higher. So a WXY is a 3-3 and then a 3-wave structure, and an ABC is a 3-3 and a 5-wave move, and this looks impulsive. So therefore I am now actually going to remove the WXY and mainly going to be looking for the wave C target area over here. However, it should at least be noted that we are currently in the wave Y target area between the 1 and the 1.236. Of course, we had that additional resistance here as well, so you want to see this passed for then the target area of wave C, which is above, sitting between 30.5k and 30.9k, which is interesting as it is also in kind of like confluence with the triple top and the resistance area that we have over here. So it will be very important to see how price is going to react inside this area. Same here, of course. See how price is reacting, but if price can manage to find its way to the upside, this is my most important area for potentially downside or continuation, and that all depends on the reaction that we see more locally. Now, if we are gonna check more locally what's been happening with this move to the upside, then the more bearish scenario in potentially then a WXY is that this move is then finished. So we are then looking for a 3-wave structure in a zigzag, an ABC, to finish that wave Y. Even though it looks quite impulsive, we should at least keep in mind this can be an ABC, within C a 5-wave structure to the upside. Now wave C went all the way to the 1.618 trend-based fib extension taken from the low to the high of A to the low of wave B, which is a rare target for a wave C, but it is a common target for a wave 3. So that's something we keep in mind. Now if we are done looking for the end of wave C, we now want to see impulsive structures to the downside, because on the medium time frame we are then looking in the bearish scenario for a 5 3 ending, and a 5 to the downside. So you want to see now impulsive structures to the downside. You don't want to see corrective structures to the downside. So that is something we have to keep in mind when observing price action today over here as well. In the more bullish scenario, we are still expecting continuation to the upside. So we then have a wave 1, wave 2, very shallow wave 2, bouncing on the 0.236, which is very uncommon, very rare. It's either very bullish or it is more of a sign for a wave B. But at the moment, we have seen it more often actually throughout this impulse. It's not the first time. And to at least quickly show you that it is not the first time, because I remember this from the first push that we had to the upside. We had the same going on over here. We had a 5-wave move to the upside. You take a fib from the low to the high, then you toggle on the 0.236, which I have to find over here in my settings real quick, and then you will see that also this move retraced, there you go, to the 0.236. So it is it's not a common target at all. Actually, for officially a wave 2, it's not even a target, because most commonly you're looking for the 0.5 to the 0.786. The 382 is rare, and the 236 is very rare. So that is something we at least keep in mind with this structure that we now have towards the upside. But it looks good so far from an impulsive point of view, where then wave 3 hit the usually minimum target, being the 1.618, and wave 4, and this is important, is not allowed to close any candles below the 0.5, and you can see we tested twice now, so preferably the low of wave 5 is in, and we're going to find a move to the upside today. This 0.5 is taken from the end of wave 2 to the high of wave 3, which then is the target for 1, 2, 3, 4, and you're going to be looking for a wave 5 to the upside, where the most common target for wave 5, taken from the high of 3 to the low of 4, is in between the 1.236 and the 1.618, which is between 30.3k and 30.6k, which, there you go, is in confluence again with the triple top as well as the resistance area that we have around this area. So this is such an important resistance area for the bullish and the bearish scenario, because in that low time frame scenario I've shown you, which is this one over here, if we are looking for a wave C and then an ABC flat, right, expanding flat, then this is the wave C target area in confluence with the wave 5 target area, in confluence with the triple top and the general resistance area we have over here. So this area is going to be very important for price, and based on the reaction we get over here, we can decide what is next. Of course, in the more, let's say, medium time frame bullish scenario, this could be then a wave 1, 2, for then a bigger push to the upside in a wave 3, which are sub-degree waves of then a bigger wave 3 to the upside. So even if we reject over here, it doesn't mean we go all the way down. It depends on the structure we get towards the downside. If we're getting 3-wave moves, or if we're getting corrective structures to the downside, we get a higher probability of continuation. But if we're going to see impulsive structures to the downside, then there is a higher probability for a continuation to the downside and look towards those 27k levels, because there's quite a gap over here without much support, and the next support is basically between 26.8k and 27.4k. Now, if we then zoom out a little bit, have a look at the volume profile, then you can see that price is now backtesting over here the value area low. It found its way inside, it didn't yet hit the point of control, currently retesting over here the value area low for potentially then continuation to that point of control. And that's quite interesting, because around that point of control, it is the point of control, a monthly naked point of control. So the previous month, most of the volume of that month has been traded at 3300, very important level, which then also is in confluence again with at least almost the triple top and the blue target box over here. But we also have a untapped weekly at 3247 on my Coinbase chart over here. So we just missed out on hitting this. Would be nice to hit this. Currently also retesting the daily, by the way, in confluence with that value area low. So that is quite nice. We know that we don't want to see price going below for a wave 4 if we are looking for continuation for a wave 5, and we have important resistance right above us. If we look at the CVD divergences, Divergences, well, this one now played out. Brilliant. Higher low on price, lower low on the CVD. Target was this high. It's been neutralized. We don't have any like local CVD divergences. We got to wait for those. But this is brilliant. CVD is so powerful. Make sure to please for yourself check out the video in the end screen to learn more about CVD. Now, I do want to at least give you a sneak peek before going into probabilities, because I've been working hard on a new membership level here, which also teaches you about my strategy. Had many questions about this. What's your strategy? How does it work? So I'm preparing you guys over here. I have my entry requirements, a document uploaded, my journal. We can do some live trading setups as well, and how I manage my trades. And then of course we have a lounge. So that is all coming up. I'm preparing it now in what is yet to come. And of course, once it goes live, then you'll be the first to know. So the probabilities then, well, on the medium time frame, I am neutral because we are looking for the reactions at that zone, which is this area over here, right? We are looking for the reaction over here. Based on this reaction, we can decide what is most likely on the medium time frame. On the low time frame, I'm looking for more upside, preferably again to that triple top area and wave C area, as this on the micro looks more impulsive, because on the micro the bullish scenario looks better, mainly because this structure over here went to the 1.618, which is a common target for 3, but the 1.618 is a rare target for a wave C, and therefore the probabilities are higher for this being a wave 3 to the upside with then a 4 and 5 compared to a wave C. That does mean you want to see this low hold. The moment we're going to close candles below the wave 4 over here, below the 0.5, probabilities might change depending on how that happens, of course. So this is currently the probabilities, and then we look and observe the reaction at the target areas as mentioned. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.